Hey there, it's Trisha, and I wanted to go over a couple things, not necessarily from Friday, but a couple different things that you can trade, and I'll go over some maybe targets for your exits and your stops and which charts you could use to take those entries. And so you might find it helpful just so you can find something else to trade if you prefer. And if you'd like more information on the setups, you can go to www.easyemintrade.com. And I do have a webinar scheduled for Thursday, September 30th at 8 p.m. And if that's something that you're interested in, you can get the information at the website. And space is limited, so if it's something you are interested in, make sure that you sign up early. So I'll start with the ES. And I'm going to go over some range trades as well so you can have an idea of how to better do those. But first off, let me start out by saying for the NQ, I like to trade off a 1.5 point range chart, and for my broader view of the market, I like a 3,000 tick chart. You may choose to use a 1 point range chart and a 1597 tick chart, and you can play around with that and see what works for you. And if you choose to use a tick chart to take your entries from, you may choose to use like a 377. I know those of you using Thinkorswim don't have that option, so you can use a 333. And if you are using a tick chart for your entry, I would recommend looking at the Kaboom setup with using the default settings on your indicator rather than the settings that I suggest in the ebook, and you might find that you like those better when you're trading off that tick chart. But and just briefly, I just want to show for taking range trades, you'll see here when looking at the broader view of the market, it's pretty easy to see that you're going sideways and continually hitting the same area of resistance and support. So once you've established that you are in a range, then you can take shorts at resistance and buy at support. And this is the slow stochastic, and if you want to be conservative when you get up to resistance and wait for that to cross below 80 and take a short expecting to get down to support, you're down to support, you could wait for your stochastic to get above 20 and then take a buy. The key thing to remember is that you want to make sure it gets to support and to resistance. Up here, when the stochastic gets above 20, that doesn't mean that you're going to buy here just because the stochastic is above 20 and heading higher. You want to make sure that you're taking it at support and at resistance. And once you've established those areas with a sideways trading pattern, then that's what you're going to be waiting for. If it doesn't hit support, then just pass on the trade. If it doesn't hit resistance, just pass on the trade. By doing that, in waiting for your stochastic to cross below 80 for a short and above 20 for a buy, it will keep you out of hopefully the trade that will finally break out above resistance or below support. At some point, it's likely that price is going to keep going either through resistance or through support. So if you're waiting for your stochastic to cross below 80 when you get to resistance, you can see it never happens. It never presents that opportunity. So that would have kept you out of this trade for a range trade anyway, taking a short. And then once it breaks resistance, then you're no longer interested in a range trade anymore. The idea of a range trade is taking it from support to resistance, support to resistance, support to resistance. If it breaks either one, the resistance or support, then you don't take any more range trades. Then you're looking for a regular setup using the Kaboom or an opportunity for a re-entry. So anyway, on the NQ, I like to use 3 exits, and you can exit however you like on whatever you're trading. You can exit 2/3 of your position out at your first target and manage it any way that you want. I'm just giving you just a general idea. So on the NQ, I'm using a 3-point stop with a 2-point target, 4-point target, and then a third for a runner. In the environment that we've had over the last few weeks, you would be good to take majority of your targets at that first at your first target, and then what I do is I move my stop to my entry, giving me 0 risk now. Actually a tick better than my entry. So of course once you do that, you do run the risk of getting stopped out, but who cares? You can always re-enter. So I'm fine with that. On the ES, I like a 1-point range chart for entries, and a 5100 tick chart as the broader view of the market. And for that, a 2-point stop and targets of 1 point, 2 point, and a third for a runner. Again, up to you if you want to exit a majority of your position at the first target, move your stop to your entry, and then you're sitting there risk-free. On the YM, I have not traded the YM in a very long time, but I have been watching it just so I can give a couple people ideas on what they might be able to take your entries from. And for the YM, which is the Dow, I would suggest taking your entries from a 6-tick range chart and a stop of 15 ticks and a target of 10 ticks or 15 ticks and then 20 ticks and then a runner. So you can mess around with that and kind of figure that out for yourself, but that at least is a starting point. And the Russell, likely your symbol will be TF, but for the Russell, a 6-tick range chart for entries and a broader view, a 962 tick chart. You could probably even use a 1597 tick chart if that better suits you, but you can check both of those out. And for the Russell, I would suggest, again, checking these out for yourself, but probably a 15-tick stop with a 15-tick target, a 20-tick target, and then the possibility of a runner. And once the first target's hit on any of these, again, I suggest moving your stop to your entry or a tick better than your entry. So then you're sitting there totally risk-free. On the 6E, I like a 4-tick range chart for entries, and the broader view of the market, I like a 1597 tick chart. And the 6E is the only thing that I like to have all the floor trader pivots with midpoints on, because it does hold up to them really well. So I like those on there. None of the other items I don't put all the floor trader pivots on, just the 6E. And targets on that are, for me, 8 ticks, 15 ticks, and then a third to run. Or you can use just above or below a floor trader pivot as your targets, because it usually will repeat same areas of support and resistance. So the stop on that is starting out at 12 ticks, and once again, once you get your first target hit, then I'm moving my stop to my it's actually better by a tick than my break-even point. So so that's what I like for those items that I just pointed out. And I know that a lot of people have been trading the Russell. I really haven't done much with it, but you may find that it moves pretty quickly, and each tick is worth $10. And on the 6E, each tick is worth $12.50. On the NQ, each tick is worth $5, and on the ES, each is worth $12.50. And I think I got everything. Oh, and the YM, each tick is worth $5 as well. So anyway, I hope that helps, and if you want more information on the setups, just go to www.easyemintrade.com, and in the upcoming webinar I will go over how you can be more aggressive in taking some of the kaboom entries or more conservative. So I'll give you a couple options on how you can, like I said, be more aggressive or conservative. Okay, take care.